Okay, hello everybody. I am TaraLyons of Team TaraLyons and Royal LePage, and I have with us here today, of course, Julie Martin, who is part of our team as well. And we have Terri Gulliver with CIBC, and she's a mortgage specialist. So welcome. So in these crazy times of COVID-19, we've been getting a lot of questions in regards to mortgages and financing, and we have a list of questions here that we're going to ask Terri and have her answer for us. So we're going to get started right away. I've got them written down. So one of the most common questions that we've had a lot of change in the bank rates, which we were really excited about at the beginning of this before COVID hit, and that was with interest rates coming down. But a big question is, what is the difference between a fixed rate, a variable rate, and the Bank of Canada? Because we're seeing the Bank of Canada rate that's been coming down quite a bit, but now we're all of a sudden seeing some of the other rates going up.
Yes, so the Bank of Canada rate is separate from the bank's prime and fixed rates. There are many factors that influence the rates of the banks. For us, we really focus on what type of rate is best for our clients during our advice discussions. Some people are more suited for a fixed rate where they have the security of knowing what the rate will be the entire term. Other clients really like the flexibility of a variable rate where rates can go up and down throughout the term of the mortgage. Right now, variable rates are definitely lower. So if you're in a variable rate, good place to be at this point. And fixed rates are climbing a little bit, but they're still low. You still can get a 5-year fix under 3%. So it's not bad.
Yeah. It was just I know they were coming down so low, and now they just started to go back up again.
That's right. Yeah.
One of the things I had heard is that the potential for that was because it was another way, just so much uncertainty and so much money that is being moved around, and that was one way for them to be able to at least keep it stabilized.
That's right. Correct.
Yeah. Okay, another question is, if I can work from home but have reduced hours, etc., what options are available to me with respect to my mortgage?
So we have several options available to help you. We suggest the first step would be for you to speak directly with a CIBC mortgage advisor who can provide you advice on which option would be best to meet your unique situation. So whether it be, maybe refinancing your mortgage at this point, or advising you to go defer your mortgage payments if you're having some financial hardship.
Okay. Yeah, it's a tough one right now because so many people are losing their jobs, being laid off, and so it's certainly going to help if they're able to defer them. And that's actually the next question is, we've heard so much about deferral programs that are out there. So what is that deferral program?
Okay. And I mean, this is all new for us too. So, I get quite a bit of inquiries during a day. We don't, as mortgage advisors, don't actually process the deferral payments. But what happens is a mortgage payment is deferred. It's just one of the options we have if the client is facing financial hardship. CIBC has put in a measure of place of temporary relief for the clients who are experiencing this. Qualified products include mortgages, personal loans, credit cards, lines of credit. Clients can request one time to make a payment option deferred up to 6 months. Basically, what happens is the interest rate fees will continue to accumulate on the outstanding balance. And then, of course, some restrictions apply. So it really depends on your situation personally.
And so who would qualify for a mortgage deferral?
Everyone's needs are unique. They are being very flexible right now. So to see how we can help you, there is an online form available, after which our CIBC team will review the situation and contact you to discuss your options that are available to you. You can also, of course, reach out to your mortgage advisor, because then maybe it's not a deferral that's best for you. Maybe it's a refinance or something at that time.
So how long can you defer your payments for?
We offer mortgage payment deferrals up to 6 months. Our team will work with you to discuss the situation and discuss the options available for you. So, some of them are recommending, maybe just do 3 months for now. You can always call back and defer longer if you need be, depending on the situation. So maybe a 6-month isn't what's right for you. Maybe it's just a short term, depending on, again, your situation, what job you're in. Are you essential worker, non-essential worker type thing?
Who do they contact if they do need to defer?
So at CIBC, again, we have the online process that validates the client and submits a request to our client account management team. Clients can also call our call center. They are experiencing very, very high call volumes there. You can wait up to 3.5 hours and end up just leaving a message. So my recommendation is using the online form, and basically they will get back to you. They have a really, really good process. They explain it really well, and you will get an email too once you know that your mortgage has been processed as deferral.
Isn't it amazing how everything is just changing online? And thank goodness for the internet. Could you imagine if this had happened in the 80s? And
Yeah, can't imagine.
No, it's incredible. We just got another message from one of our local lawyers just saying how things are changing with them as well. So that may be a segment that we do next.
That's right.
Yeah. So, okay, biggest question is that people have, because some people think, ooh, I can defer my mortgage and I don't have to pay it. So what happens with the deferred payment?
Yeah, for your mortgage, the interest rate occurs during the deferral period. So it will be added on to the principal amount of the mortgage at the end of your deferral period. So it helps you with immediate relief while experiencing your temporary hardship. But as a result, once payments resume, you will continue to pay interest on the new principal amount. So your payments may increase after the deferral period. So really think about it when you're doing it. I mean, this obviously helps people in this time if they've lost their jobs. If you don't need to do it, don't do it.
Yeah.
Right? Only do it when you really need to get down to it.
And so when would those payments be due? Would it just depend on how long you've deferred them?
Yeah, so let's say you do a 6-month deferral and the payments resume. That's when your payments would increase on your mortgage. So you'd get a new loans term agreement that would show you what your payments would be from the interest that has been accrued onto the mortgage.
Okay. So if I opt to do a mortgage deferral, does it affect my credit score?
That's a good question. Lots of people are obviously asking that. Rest assured, deferred payments will not be reported on your credit bureau as missed payments. We do not expect that the impact on your bureau from a deferral will be materialized. However, it is important to understand that part of this determines your credit score and the balance owing on your payments, because obviously with interest occurring and not making a payment, your credit balances increase. And then depending on the balances opposed to your credit limit, it could bring your credit score down.
What if I want to refinance my mortgage? What are my options for that, and who do I speak to on that?
So CIBC's clients still can refinance their existing mortgage during the times of reduced income. We would review the client's entire financial picture to provide solutions that are the best course of action for each client. We have many options regarding how prepayment costs are managed in the event of a refinance. Those are also advice-based decision or conversations to ensure that clients get all the information that they need to make the right decision. So, we're taking step by step, because obviously a lot of people are unemployed right now, and we need people to be employed to do a refinance. So, that's where it would come into play with a mortgage advisor, where they would be advising you, okay, if we can't do the refinance at this time, maybe best option is to defer a payment, and then let's look at refinancing when everything is sort of back to normal, you're back to work, payments might be higher, you might be spending a little bit more money, and then we can refinance then too as well. So it really depends on each person's situation.
So a question about investment property. So if I have a mortgage on an investment property, can I defer that payment since we know we're having some issues with tenants not being able to pay their rents?
Absolutely. They're looking at all investment properties. So yes, so, given the situation that your renter has lost their job and they can't make, the mortgage payment, you can absolutely defer your investment payments.
For
Yeah.
any property, right?
Yes, exactly. Yeah, cottages, any type of property that you have.
Perfect.
Yeah.
I think that's all our questions.
I think so.
Yeah, well, this is awesome. Thank you for having me.
Yeah, and so Terri, just give us a really quick synopsis of what you do so that if somebody needs your services.
Absolutely. So I am a CIBC mobile mortgage advisor. So I work just like you, like a realtor. I'm 24/7. You can contact me through my cell phone or email. I'm obviously not meeting clients in person, but we also have a process for that as well. And I can help refinance. Obviously, if you're still needing to purchase a home, help with the financing on that as well. And everything is done through online e-signing, sort of like a DocuSign with realtors, and we're making it very, very easy for the clients right now.
And that's a really good point that you say that, because it is something that came up earlier today, and that is anybody who's looking to purchase or sell right now, you really do need to have some form of internet and online availability, and potentially video. And so there's a lot of free services out there like Zoom and FaceTime and things like that. And if you don't have that, then whoever you may be close with, that you're able to use theirs. Because lawyers, banks, us, we're all having to do that social distancing. We're not supposed to be in face-to-face contact.
Mm-hmm.
So we're trying to tell people up front, you need to have the availability to be online in order to close a house now.
Yeah.
That's right.
Yeah.
Yeah. It really is. And I mean, some situations it's tough. We do have some forms that have to be printed and signed, but again, we're making it really flexible for our clients. If, we still have the branches open, people still can go into the branches. I don't, I try my best not to have my client have to go into a branch to drop, but sometimes if they have income and they just don't have that availability. But really, if you have a cell phone, you can download apps that are scanners that can easily be scanned to a PDF and emailed to me. So, and I help a lot of clients assist in getting that type of stuff set up so that we can work together and get it done.
And that's key, having somebody who has the technology to be able to help you through this process. So things are taking a little longer, just so everybody knows. When we do put offers in place, we're giving usually 10 banking days now. It's no longer that quick 1 day, 3 day, 5 day. It's now, we're trying to give the banks more time. Appraisals, I'm sure you've seen and noted, appraisals are a little different today. They're not going inside the homes. Mm-hmm. They're doing drive-bys and looky-loos through the windows and using photos that we have.
That's right. And in some situations for our appraisals, obviously a drive-by, they're not getting a full idea of what's going on in the house. So, our clients can actually submit pictures to the appraisers as well, so that we're determining the value that's correct, right? Because typically drive-bys come in less than what the actual value is. But you know what? If it makes the deal work, then you know what I mean? That's fine.
That happened with a client, and they didn't know, because it happened last week, and and as we know, things are changing all the time right now. And they called me up and they said, Tara, oh my gosh, our appraisal just came in a lot lower than we expected. And I said, did they come in your house? And they're like, no. I said, well, if they're looking at the old listing, they're not seeing all the renovations that you've just done.
That's right.
Did you give them photos? Well, no, they didn't ask. I'm like, so when it's a house that's listed, we, as the realtors, can provide the interior photos. We can provide the videos if we've done videos on them. We can provide these things. So make sure that if you're refinancing and you need that appraisal, make sure you're doing that as the homeowner, that you're providing that information to the appraiser.
Absolutely. It really helps, and it really, it gives them that exact idea of what the value of the home is to make things work for them.
Yeah, because especially when you've done renos, it makes it work a little different. Homes work. Don't use the pictures with the old kitchen. Well, thank you. For everybody who's been watching, we thank you. We will provide Terry's information, and of course you'll have our information all below attached to this. If you have any questions, don't hesitate to call any of us. We're here to help you through this. This is new to everybody. We are in this industry and we are keeping up to date as to what's changing and happening, and we are here to help you through this crazy time. We are going to look back on this and go, wow, what did we just live through? But we've lived through it.
Yeah,
so
absolutely.
everybody, thank you very much for joining us.